Hey everybody, it's Gil. It's Wednesday, December 21st. It's 10 o'clock Pacific time, and we're watching the market here. You can see my, this is actually my main e-signal screen. Everybody can see my screen just fine, right? Is anybody out there? Okay, there we go. All right, very good. Thanks, guys. All right, well, this is actually my main e-signal screen. I use several quote systems. This is my main e-signal screens. There's a couple other screens that go with this on other monitors, but this is kind of what I try and set up every day. Just has my basic list of things. These are my positions right now. I'm short all these stocks, and I think some interesting action today and a very profitable day for me, so I'm up pretty good on a day following an alleged follow-through in the market. So here's stocks I've been watching on the short side. Down here, the few names I've watched that I think look positive on the long side. Of course, we have GLD and SLV down here. And then over here, I'm watching the big NASDAQ stocks. And in here, just a mishmash of names that I'm keeping an eye on, you know, stuff like Zynga and so forth. But anyways, what we want to talk about is the market. And of course, yesterday we get a lot of emails, obviously, because everybody's talking about a follow-through day. So I guess this is it here. You have increasing volume on the NASDAQ. I'm using a candlestick chart, by the way. So those of you who aren't familiar with candlestick charts, the blue days are up. That's why I color code them. The red are down. And when you see these candles, the body of the candle, the low here is the opening, and the actually on the red one, the high here is the opening, and the bottom is the close. Okay, the reverse is true for the blue ones, and of course you have the intraday ranges here. So on these tails, so that's what you're looking at. You have a follow-through day here, and we come off. We didn't go to a buy signal. And I'll let Dr. K discuss that, but you know, IBD is calling it 17th day follow-through, which technically it is. The question is whether it's actually going to result in a major rally. And you know, one of the major factors in a follow-through day is the action of the leaders. So I'm just kind of watching the market here as it turns. So if I'm pausing, that's basically why. But I think I'll turn it over to Dr. K and let him discuss why we're not on a buy signal. Dr. K, you there?
Yeah. Well, essentially, there's been discussion about the day on which the follow-through day occurs, and if that day occurs too late in the run, then it's a weaker follow-through day. But my studies have found quite some time ago that there's no statistical relevance to when the follow-through day occurs. So it could occur on the 10th day, the 5th day, the 20th day. It's pretty relevant. What's more important is the shape of the price-volume structure that leads up to that follow-through day. That's far more important. You want to see the quality and coherence in the pattern that leads up to that day, ideally. You also want to take a look at leading stocks and how they're setting up in their bases. And if you have both of those on your side, the odds are much more favorable that that kind of follow-through day will work.
Anyway, so that's basically the deal here. We're not seeing the action in the leadership that we would want to see if you're going to have a bona fide follow-through day. And of course, you know, even though IBD tells you you're in a follow-through day, it also mentions that you don't really have any stocks that are really in position to buy. There's very few things out there. There's a couple of things that I'm looking at here. You can see the Salix Pharmaceuticals. They have a drug that is used for one disease, has very few patients, but they're going to grow their revenues pretty strongly in 2012. And so you know, you have a viable gap up here, and that's basically what you're looking at here. That could be bought. Actually, I'm not going to use this chart. Let's get rid of this. Let's go here. But you can see the big volume here on the gap up. Dr. K, what do you think of this pattern overall? You like it?
Yeah, I mean it's constructive enough given, you know, this is a bio, you know, it's a medical company, so it might be a little bit choppier than your typical company, but when it gets going, it can really run, and it has had some great news. The earnings are forging ahead, so are sales. So overall, it looks very robust. And the other nice thing actually about these medical stocks is that they sometimes can buck the market trend, and that applies both ways. In other words, the market's going up, it might not, but if the market's going down, it sometimes resists it and will just grind higher anyway. Especially given the positive news flow that this company has had.
And so the other one we're looking at, yesterday we noticed MasterCard also had a pocket pivot. I think IBD, do they say that you're coming out of a 3 weeks type pattern on this one? I don't really see that necessarily. Not really. That's not really a 3 weeks type pattern. Let's look at this on a weekly chart. Let's see. So if we switch to a weekly view on MA, I wanted to make a comment actually about these. That's not a 3 weeks type pattern. This is not closing tight. It's a 3 week, it's a 2 week pullback, so this might be a little flag, but that's not a 3 weeks tight pattern. A 3 weeks tight pattern needs to be closing pretty tight across the, across those 3 weeks there. You might consider maybe Visa is a little bit tighter because that closes, so that would be more of a 3 weeks tight formation. So Visa is actually following MasterCard out, and it's interesting. This is an area where you're seeing some strength, and these stocks have actually held up. So, not that we'd run out and start buying everything, but there's some things to keep in mind if you're going to play this as a market of stocks, because it's really not clear exactly what's going on. I can make some money shorting, but I may end up covering some of these things and taking my profits I have on some of my positions, because I came in this morning and went 400% short, and now I'm back down to about 120% short. So I've taken profits as stocks have come down. Now, if they bounce, and you're going to see intraday, I'm still short a small position in Amazon, and it rallies back up into this 20-period line on a 5-minute. This may just roll over and head lower. So I think the jury's still out on a lot of these names. We talked about this morning. CRM is a gap down move. That's breaking out through this low. Now, I think if it can't get above this high, it's probably heading a lot lower. The Oracle news is bad for them, and they're basically competitive oracles. So I'd be shorting this using the 100 level as your stop, and I'm short the stock right now, and it's kind of holding right here. But it's, we'll see what happens. If it doesn't, if it keeps rallying and gets back above 100, I'll just cover it. It's pretty simple. But right now, I don't think you know whether the market's going to be trying to go higher, or if it's going to roll over. The big thing here is yesterday we were all very puzzled about why is the market up so much and why so strongly when there's no real news and nothing really happening. But I think the market was already seeing that there was going to be some sort of action coming out of the European Central Bank. I think they were cooing yesterday. Of course, this morning you see that they've got, is it 489.2 billion euros they're going to have available for 523 banks. So we figured out that that's 1.0965 billion dollars per bank. So I guess that's just a huge QE infusion there. And maybe the market says, we're not so thrilled about it. So we'll see what happens. But again, you're going into the end of this week, and you got Christmas coming up on Sunday. So things might be choppy, sloppy, and slow. But it definitely seems to me like if you take the market on a stock-by-stock basis, there's a market of stocks rather than the stock market, there's some trading to be done. And I've been making money consistently over the last week and a half. So, and that's been mostly on the short side. So I think, you can take that approach. It doesn't mean you can't, or you're not going to have to sift through some difficult times as the market's all over the place. I sat with shorts yesterday with the market up 333 points on the Dow, and today we can make that back pretty quickly when things roll over. So you do have to sift through some volatility if you have conviction on the short side. And some of these names, I think, just continue to break down. So, CRM, we have Amazon, and you can see here your volume. I don't think it's picking up. Let me take a look here. It's 5% below average for this time of day, but I notice it's been picking up steadily, so I think it's probably going to be higher than yesterday. So you're picking up volume, and notice how you break down, you go through this low, typical undercut and rally, you do a little rally, and you run right into the 10-day moving average, which is this pinkish moving average, and you're rolling over today. So I'm short that, holding a position. I'll trade, I'll come in and trade a 50-100% position back and forth and just lighten up when I think it's going to bounce. So right now we have Amazon bouncing, so I took some profits in here. And it looks to me like it may try and get back above this 20 period intraday, but I would look for it maybe to bounce up to 177, 178 on a natural reaction bounce. LinkedIn is another one I told you guys about 2 weeks ago, in fact, and some of you can go back and look at that video from 2 weeks ago. I told you I was shorting it right around here. Now we haven't put it out as a short sale setup on the website, but that we come out with what we think are the most palatable ideas for the most number of people who are subscribing to the website. In the webinars, which we consider a service for people who want to get a little more intimate, we talk more about the broader range of our ideas at any given point in time. And just I did cover Monsanto. The way I'm looking at this is you're coming up into the 65-day exponential. It could get up in here, but it's not really giving way, and if I'm not making any money on it, I'll just cover and go away. I may come back and short it again later. So I just wanted to point that out. But where was I now? LinkedIn, it was shortable to me on this rally, and there was a bunch of hype at the time. You came right up into this area of overhead resistance, so I was putting it out here, and like I said, you guys can go back and look at the video, and I've been playing this on this move down. I'm looking for it to test this low eventually. You continue to come down today, and to me the stock looks pretty weak, so it's one of the few shorts I've actually held overnight, just because it is so consistently weak. There's a very interesting article on thestreet.com talking about how LinkedIn's fair value is 20% of what it's worth right now, so I guess that's $13, something like that. So yeah, sure, I'll take it. But I think this pattern is weakening. Now, something that's interesting, look, from a psychological standpoint, I just want to talk about quickly. Monsanto, that looks juicier to short this morning when it's right up here at a moving average, right, stalling out, as opposed to LinkedIn this morning, which is hanging around a low. You got low volume, so you're afraid it's going to rally back up, but it breaks. And it just tells you this in the same way that what's strong, strength begets strength, what's strong remains strong, what's weak generally remains weak. And of course, we have no better example of that than Netflix once it starts to break down. So I'm kind of looking at CRM right now as being similar to this kind of breakdown. It's really going to depend on how it closes. I don't know if it tries to rally back and maybe it turns into a different situation that fills this gap. But for now, I'm going to play it, shorting it here, using the 100 level as a guide for a stop and just working it from there. So it may not work. I mean, the thing may bottom here and go higher, but I'm having a hard time seeing how that's going to happen when you've got its cousin stocks like VMware just getting decimated, its cousin stock like F5 Networks just getting decimated. So I have a hard time seeing it happen. It doesn't mean it can't happen. Stock's already been weak for a period of time, and this is one we've been following on the short side for a while. Because you can see in the weekly chart you're in this rolling head and shoulders formation, and now you're breaking down, and this is a gap down. Now here's a trick: you are undercutting this low, so I don't know if you get a temporary undercut and rally, but I wouldn't think it's going to get past the 100 level. We'll see. But all I do is take a position, and if I get stopped out, I get stopped out. Otherwise, I'm just going to try to hang in there and play it out. So we'll see what happens. So. Let's see here. Now we'll go look at Apple. Now Apple, I'm working this tiny position on this, but I'm shorting it up in here. It just gets past the 50-day, and from my experience, stocks can get just past the 50-day on rallies, and then they blow to the downside. So Apple's been up. I think there was a big lawsuit that they won, or a patent suit yesterday, and that drove the stock higher. But notice there's no real buying volume in here. So this rally above the 50-day is suspect, but notice how it gets, it gets everybody scared. And if there's shorts in the stock, they're probably running in and pushing it back up, or late money thinking that they're getting a cheap bargain. So I think it still is in play. I would like to see it break down below the 50-day again. So if you're watching this, if you covered on the move above the 50-day, which is totally reasonable, I give it a little more room, about 3%. I'm actually using 400 as my stop. But again, it's a small position because Apple versus, say, CRM or LinkedIn, Apple is a widely owned institutional favorite, and you're always going to get them coming in and picking it up off the lows, so it's less likely to break initially. But you start to get into a bad market, and this will come down hard along with everything else, just like it did in 2008. But that's why I'm working a smaller position. You notice it is more resilient. So, anyways, let's go to some of these others. We looked at CF. Now, CF and the ag stocks have been stronger today. Not sure why, but if it's coming up into this resistance area around 140, which you can draw a line all the way across these lows here, then I'm going to be looking at shorting it maybe as a 20-day as a stock that's like what is that? The 20-day is 139.51, so that could be a rough guide for a stop on that, maybe, and if you want to run it tight. It could rally further. It's going to depend on what the market does. Fossil's another one that I think is starting to break down again. This is starting to weaken, and it's along these lows, and I would be surprised if it broke out, so I'd be watching. Broke out to the downside, so I'd be watching for that. Polaris, I've been keeping an eye on because I'm wondering if this is in the late-stage base failure. This is a big name during this last market rally off the 2009 lows. And you can see here it had a big run. Now you're in this kind of big cuppy pattern. This is a cup with a handle where either the handle's too low or it's a double bottom where the second bottom doesn't undercut the first bottom, and therefore it's improper. So you try to break out, and now you're breaking down. I would look for rallies up in here, and maybe it becomes shortable. But it's interesting to see this stock. It was a big leader. It's a consumer name. I guess they make fun vehicles that you can drive around on your ranch or whatever. I know some people have some of their stuff. Of course, not everybody has a ranch, but just the 1%ers. But I guess they do make these fun recreational vehicles that everybody's into. What is the target for CRM on the downside? That's a good question. I think eventually you would see it get down below 80, but it could undercut. It could get into anywhere in here. So right now I'm just kind of watching this. So it's not even clear to me whether the trade is going to work necessarily, but I have a pretty good position right now. It's about 60% position right now. So it could get bigger though, depending on whether it starts to work. If this thing rolls over on an intraday, let's see this here. Yeah, some of you notice I do look at a 5-minute. I actually look at all kinds of stuff, so just to keep myself occupied. I don't think it's really significant, but 5 minutes, just a 5 minutes, will give you some idea where you're at in terms of the action during the day. So if you don't want to be trying to short something generally, if you're getting a big streak to the downside, you wait for some kind of intraday bounce, or you can see levels of intraday resistance. Right now you're working at 98 as possible resistance on the upside. You went down to 94. You started the day somewhere around 102, I think. So you retrace 50% of this, and maybe you can start adding in here or shorting a little bit in here. Like I said, so far it's just kind of hovering there, and we'll see what happens. But that's how I'll play it, So what else are we looking at? Baidu. I'm really ticked off that I didn't short Baidu up here because it's very shortable. It looks like it wants to go lower. That's all I have to say. I'm not short it right now. If anybody is, this is your target down here, this low. So if it gets down there, undercuts, you can take profits, partial profits, whatever you want. But I do think that you should consider, now it actually undercut this base, but I think over time you can see Baidu come off a lot lower. And all this is going to depend on what the market does. But to me, the market looks pretty, well, for lack of a better word, feeble here. So. But who knows? It was looking feeble on Monday, and then we get yesterday's crazy move. So it's a schizophrenic market, definitely. I don't incorporate the 2-period RSI. I just put that on my charts to see who would ask. See? I'm testing you guys. Let's see. What type of velocity or momentum indicator? I don't use any of that. They just throw you off. A lot of times I just watch the action of the stock, or I just watch it trade. And you can see it, you can see how the stock's acting. You can see where support comes in intraday. And I remember last week I was actually shorting CF on this rally, and so I was working it in here, and I kept telling Billy, my trader, that as soon as this thing breaks these lows around 140 down to 138 and change, it's going to have a sharp move, and it did, and then it kind of held here, and you rally back up, but I think this becomes shortable. So I'm just kind of watching, support levels. And intraday, you can see this thing on this particular day. It's like holding. So as it's sitting there, we're waiting. And as soon as it starts to break down, then I got real heavy, play the move to the downside for a couple days, and then cover it. And that works out pretty well. So we're actually, right now, as we're speaking, we're looking at CRM. It's coming in a little bit. Notice though, I use a 20-period moving average on a 5-minute chart because I can recognize patterns. I don't know if they're valid or what, because most of the time, you know, if you're in a downtrend, you'll see stocks will follow the 20-period on the way down. Once they start getting back above you, then you notice they hold the 20-period as support. My trader Bill Griffith tells me that that's a very common intraday trading tool that they use a 20-day, or he's some guy made a presentation that he saw talked about this as a tool they use for intraday trading. And you can see in this case it kind of works, because if you're shorting this, say, you could, on an intraday basis, and you hit it at the open, went down, you could have covered, you know, on this and wait to set up again if it breaks down below that. And that's kind of what I'm watching now. But I think this, the other thing is, you don't want to get bogged down in this 20-period moving average, because other things that will hold up that are just as technically valid as far as I'm concerned are things like 50% retracements. So intraday, and you'll see a lot of that. So you'll see those types. So there's different ways, and sometimes the 20-period holds the whole day, and sometimes you'll get a bounce if things start to get really bad on the downside for the stock. You see a bounce that retraces 50%, and you're seeing that in CRM. Now notice how we're watching this in real time, and you're starting to break the 20-period. So we'll see if this holds and whether this thing's going to break down. But I think it's looking pretty dodgy. Back going to add a little bit right here. See what happens. Okay, moving down. Let's go back to the long list. I remember Dr. K said in here this would be the only stock you'd want to buy in the market. And so far it's held up very well, but nothing really exciting there. Biogen's a biotech, holding up tight in this base and finding support at the 50-day right now. But that's about it. You know, if the market rolls over, it's going with it. We talked about Salix Pharmaceutical, Cubis. These guys have some antibiotic, I think, but you know, I don't know. They had a patent suit against Teva, or Teva had a suit against them for something, and it's a little bit. Notice you get these pocket pivots in here, but we haven't been all that impressed with the fundamentals on there. But it is something to note as forming a base. So I just keep an eye on it, because you do see a lot of biotech stocks acting well, and you know, Intuitive Surgical to me is a big medical stock, and along with that, you're seeing it act well. You know, you've seen Merck is trying to come back up. I think. Bristol Myers. So you're seeing that whole area acting well. These are defensive stocks to some extent, but on the other side, on the growth side of the whole biotech medical area, you know, iSurge, Intuitive Surgical is a growth side. So is Questcor. It's coming off today, and so is Salix Pharmaceuticals. So you know, these are holding up okay. I think A Biomed was one that was doing well recently, and now it's getting knocked around, but it's a thin stock. And you guys all know that we don't like stocks that trade very little volume. And I'm going to show you why I hate thin stocks. This is why I hate thin stocks. I guess you'd be able to get out of this thing, but look how it gets hammered. A little bad news, it's so thin, this thing's getting destroyed. Anybody know what's going on here? Let's see if anybody types anything in. Somebody's asking me if I can get a locate on a borrow for LinkedIn. Yeah, I'm able to borrow that thing all day long, so maybe I'll lend you some of my shares. Perhaps I should look for another trading space. Yeah, that would be a good idea. But yeah, I trade my money through institutional account at JP Morgan, so that, you know, they've got a broader, probably a broader box of borrowable stocks. So you know, but I notice I do have a Schwab account. I've noticed it changes some things you can't borrow, but I've never really had a problem borrowing most stocks with JP Morgan. So, you know, it's just kind of the thing. Somebody's asking about Oracle, but I already talked about Oracle as it relates to CRM, F5. So here's Oracle getting decimated. I think that's bad for the market when you see that happen. And I think it's bad for these stocks. I think it's bad for CRM, F5, VMware. I think in general, not a good sign, not what you want to see. Big leading stock. So somebody asked about ELN. So you want stock advice, huh? Okay, so I mean, yes, that's another drug stock, and it's coming out, so it looks okay, huh? Not that I'd buy it. So let's see. I'll run through some more questions here. Somebody asked, any comments on the IBD confirmed uptrend? We already talked about that. And I think Dr. K was pretty clear about where he's at with all that. IBM breaking down. And it's another sign. This is stock goes acting well now. It's starting to break down. And is this a late-stage failed base? Starting to be. But you notice something here. Notice how wide and sloppy and loose this is. And it tries to come out. I guess you call this a big cup, ugly cup with a high handle. And the weekly ranges are pretty wide, even though you do close pretty tight in here, which isn't too bad. But this breakdown now below the 50-day or the 10-week on this chart. Let's look over here. Breakdown here. That's pretty bad. So that may be telling you that the market's got some problems. And so when you see this, leadership. Where is the leadership? Where is the potential leadership? We're going to buy Salix Pharmaceuticals, a small drug company. Is that the new leadership? I'm going to buy Nuance. These guys make, I think, that Dragon software that you talk to, and I actually used that for a while. It's not really that great, but pocket pivot type move yesterday, but you're not going anywhere. So that's a big part of why we're not in follow-through day land, along with IBD. But IBD pointed out that the leadership factor isn't there, and as Dr. K pointed out at the beginning of this webinar, what's going on with leadership when you have a follow-through day is much more critical than the follow-through day itself, or even what day the follow-through day occurs on. So we're looking at a 17th day. Yeah, that supposedly it's weak, but there's no statistical work to show that that's necessarily the case. I've seen late-day follow-through days work, just like Dr. K has, and it's more a factor of what's going on with leadership. I do remember in 1986, we had a follow-through day in August. I think it was like a 13th day or something. And it was a late one, but it resulted in a pretty good rally in 1996. Yeah, 1986. Yeah, I'm really dating myself, but 1996. Yeah, and you had a big move in a lot of stocks, particularly oil stocks, and some retailers were moving during that period. So you kind of had to be awake, and But I think that's really the factor for us right now. So, anyways, what else? Let's take some more questions here before we shut it down. Dr. K, what would it take to put the model on a buy signal?
Well, we just have to see more evidence that leadership and price volume action on the leaders, first of all, is showing something a bit more constructive than what we've seen so far. We'd like to see also another day where the volume is greater than the day before, and the major averages, the S&P 500 and the Nasdaq Composite are up at least 1.5%. Yesterday didn't cut it. That's not to say that in a few days we could have another one of those days, and that might be a bona fide follow-through day. But we'll have to see when we get there.
Yeah. Dr. K, does the model take into account end-of-the-year seasonality? No, it only takes into account middle-of-the-year seasonality. Dr. K, your answer?
It looks at price volume action, so that's really the focus there. There sometimes you do get Santa Claus rallies, but if you look back over the years, you'll see that you see a lot of weak volume days on the bottom half of December, and oftentimes the market just goes sideways, doesn't do really much of anything. Sometimes you do get a little bit of a rally, but again, it's usually pretty immaterial. Seasonality is there's some statistical significance to, for instance, buying the day before Thanksgiving or the day between Thanksgiving and Saturday. There is statistical significance with all of that, but again, I think it was 2009. It was a terrible day before Thanksgiving and after on some surprise news that hit. So just because that particular aspect, seasonality worked 9 times out of 10, but the 10th time it really cost a lot of money, and so you have to be very careful the way you use seasonality. I generally put price volume action well ahead of any seasonal factors, just because the price volume will tell you what you need to do, regardless of what's happening at the time of year.
Yes, but I have noticed if you talk about things like seasonality when you go on financial TV, they really like that kind of stuff. So it makes you sound like you know what you're talking about, but seasonality really isn't all that relevant, nor does it take primary importance over things like price volume action. I think that alone tells you what's going on.
Yeah, the thing is,
particular this and Go ahead.
I was just saying seasonality is oversimplification. That's why it's so popular among many investors out there, and that's why the media loves to talk about it because it draws a bigger audience. They love to hear that. The simplification of it means that it gives investors hope that they can make an extra dollar or two, because it's the day before Christmas or something. But ultimately, I think it's more of a distraction than
Right,
anything.
exactly. Get on board for the Santa Claus rally. I think that's what they were talking about yesterday. Someone asked this question. I think this is very relevant and probably a good way to close off today's webinar, or at least get closer to the end. With these market conditions, it's easy for someone to get discouraged at trading, but when you get discouraged, how do you still get on the comp every day and keep trading? We're psycho. To me, you're just watching what's going on in the market. To me, the market in and of itself is extremely fascinating, and whether you have to be in the market or not is another issue. I found in this environment that I'll keep trading and trying things out, but I'm only using a third of my capital. So you have to recognize that the environment isn't all that great for making money. Dr. K and I together, running the account we run together, we've done very well this year, and we're happy to be up at all in this kind of environment because it's just absolutely nutty. But it's not really a matter of getting discouraged. I think when the market dings you on a bunch of trades, okay, it's telling you that you can't make money. Okay. So it doesn't mean you're stupid. I mean, you might be stupid, but just because you make several trades and you don't make money doesn't mean that you should be discouraged. It's telling you, the market's telling you that, hey, this is not an environment to make money in. So you take the information, which if you want to take it as something to get discouraged about, then I think that's a negative way to look at it. But if you want to take the market information saying, hey, this is a tough environment. You want to keep trading full bore, you're going to get your head handed to you, or else you're going to die a death of 1,000 cuts. So for me, I could kind of see that earlier this year, and that's why I stopped trading with all my capital, and just because even if I lose a third of it, that's still plenty. I can always sell a few guitars and raise some more money to put back into the market, but that's just part of it. So I think for us, our passion about the market is centered around the fascination we have with the fact that the stock market and the markets in general, they do represent kind of the ground zero of what's going on in the economy, the global economy, in the entrepreneurial areas of these economies, and things that are going on. What's going on with the governments? We're always talking about the European Central Bank, the Fed. So all of that's really incorporated into what is kind of the daily human reality of business and the machinations of government in terms of how it affects business in the financial arena. So it's very fascinating. So I would say focus on whether your passion is with the whole aspect of being in the center, in the hub of all this incredibly fascinating entrepreneurial and economic activity, or if you view it more like sort of a casino and you're focused more on whether you can make money every day. And for those of you who are obsessive compulsive like me, maybe that's what you're doing. But I think what you want to do is not get discouraged. Just recognize, even if you are obsessive compulsive like me, that maybe you shouldn't be using all your capital and you should be chilling out, and you do that and use the market's message that way. But I think on a day-to-day basis, you don't have to be in the markets to be thoroughly fascinated with what's going on. My kids don't really trade, but they think it's very interesting what's going on in Europe, what's going on in the United States, and they actually, interestingly enough, they don't seem to be frightened by it. My son made a very interesting observation that he says, Dad, in the middle of all of this chaos, historically, a lot of people have used it as an opportunity to start a business or make money, and he pointed out A.P. Giovanni during the San Francisco earthquake, where he got Bank of America. He built the reputation of Bank of America, setting up a card table outside their demolished building and making loans to people who needed to rebuild. And he's right. So he, as a kid, sees opportunity in the chaos in the world. So I think it's very interesting, but he's very fascinated by it. I think so as traders, if you find yourself in an environment where you can't make money, back away and focus on just the whole fascination of the movements and the news and all of it and how it all kind of flows together like one big dance. So that's kind of a romanticized version, but that's kind of where we come from. Dr. K, your comments?
Yeah, I think the thing is, if you experience a string of losses because of a trendless environment, I find it's very helpful to look to these trend-following guys who've been doing this for over 30 years. Like John Henry, William Eckard. They're market wizards. They've been in Jack Schwager's books or Michael Covel's books, and to see what their long-term track records are, I mean, it's very impressive stuff. They're typically managing billions of dollars because they've been doing it so long of other people's money, and they're able to cycle after cycle beat the markets by an appreciable amount, and that's what makes them earn their market wizard title. But what you notice is that they will have their drawdowns. I mean, some of these guys, in fact, most of these guys have had more than 50% drawdowns in their career when the market wasn't trending. And instead of giving up, they just stuck with it because they knew their system is a good system, it's sound, and the markets will trend again. And there was a famous trader, I wrote a memo to everybody yesterday, that he was trading cocoa, and he lost 17 times in a row. But the 18th trade was a winner, and it more than made up for all those 17 losses. And the way that works is through money management. Money management is incredibly important. If you're going to have a string of losses, every time you put on a new trade, make sure you put on less. It should be on the basis of a percentage of your assets, not a fixed number of shares each time, because then you're going to end up losing more and more in relative to your account value. So, the turtle traders were exceptionally good at employing risk management strategies on how to manage their money. So if they have rules like if their account drew down more than 10%, they would immediately put on the brakes in terms of the position size they were allowed to use. It was a very rigid system, but that ensured their survival. Even if they had 17 losses in a row, their account still would be, maybe they'd have a 60% drawdown off 17 losses, but that 18th gain could more than double their account, and they'd more than make it back. And that explains how these turtles. Google the turtles, and you can see all these different guys over the years. Most of them have track records over 20 years, and they've done very, very well because they adhere to their risk management principles. And everyone who's listening to this, that's rule number one. Ed Seykota asked me, what are my three major rules? And I told him risk management. That was rule number one, and he smiled. He said, I'm glad that was the first two words out of your mouth. He said, if that's not the first two words out of your mouth, you don't stand a chance. So always make sure you know what your downside risks are and position size accordingly.
Yeah, and think it through. I see we get very, very few emails when we have difficult periods where you're getting a lot of false signals for the model. Interestingly, I think that speaks to the sophistication of our overall subscribership. But you do get the kind of ego-based guy in there saying, well, you've had 5 bad signals in a row and I'm losing money, and I've never lost so much money. And I'm thinking to myself, so idiot, how much are you putting in on each trade? Are you just scaling in full bore? And do you think about the potential losses and what they may add up to and what you're able to sit with? I think if anybody whines about money they lost, I think they didn't think about losing it before they lost it. And as a trader, you lose money because you made a bad decision and the market tells you you're wrong, get out. And you just do that until eventually you get a trade where the market tells you you're right and you build it and you make a lot of money. It's pretty simple. And it's easy when it happens. It isn't a struggle. That's the other thing. I can tell if I feel like I'm pushing on a string, it's telling you that maybe you're not in an environment that's right to make money. So you back away. Anyways, that's about all we got. I'm going to see if there's a couple of questions that might be relevant. Maybe an email on money management. Let's see. Thank you guys for the insight, making me feel better. I'm not a complete idiot. No, but we're all partial idiots. Remember that. And the market can make you look like an utter fool if it wants to. And you're stubborn. So you have to listen to what it's telling you. One last question. I think this is kind of relevant, Dr. K, since you talked about the TVIX or the VXX. Why have they been dropping so much? Why is volatility being reduced?
Yeah, I think it's just a reflection of the bottom half of December. Potentially, there's less volume, institutional volume out there, so that contributes to less volatility, and so the VIX has been dropping, and thus the TVIX will of course drop because that roughly, it doesn't correlate perfectly by any means, the TVIX to the VIX. Everyone should know that, but there is. Somewhat, obviously, there's a somewhat loose correlation. So, as the VIX drops, the TVIX has been dropping as well. And
Dr. K, do you see that the VIX is indicative of complacency?
Sorry, what?
Do you see the VIX as indicative of complacency?
Could be. Yeah, sure. It's possible.
That's what I see in this. You can see the chart here on the VIX, and to me, it's with all this craziness, there's a bit of complacency. uh, I'd probably be more confident that we hit a bottom recently if this were higher. So that's kind of my take on it.
Yeah, I mean, we're at the end of the year here, and a lot of the institutions, I mean, the volume tends to dry up the bottom half of December. If you go back a number of years, you'll just generally see less volume traded that day because there are
Right.
people who do go on, break, and Europeans, of course, and the world is just less focused the last 2 weeks, and that could account for a VIX that kind of trails lower. And this is why we
Right.
have not been recommending the TVIX ever in any of our signal changes because first of all, it's incredibly volatile. It doesn't correlate perfectly with really anything out there. And there are members who trade it, but they know what they're doing, hopefully. And you
Yeah.
can make an awful lot of money off the TVIX, as the model had 5 good signals in a row, and I think if you took every single one of those signals, you're up like 500 some percent. Because you can see the dollar becomes calm, and you can do the math yourself, and it's over 500%. And then it had what 3 false signals in a row, or four false signals, and
Mhm.
it's lost like 55% or something, or something like 50% drawdown. And so it's just absolutely wild the way it trades. And I'm just thinking, we have that table on the results page of TVIX, and I'm almost thinking of pulling it because I don't want it to mislead or make people think that they should be trading this vehicle unless they really know what they're doing. So
Good
I'm
idea,
kind of
Dr. Fan.
judging that. I might pull that table, but the other ones, of course, are they stand just fine. And as I pointed out earlier, TNA, TZA, that group, the IWM group, tends to have the best risk reward ratio so far of the 3 times ETF. So we tend to recommend that with every change in signal.
Oh, so I'm gonna make, yeah, on gold. Gold is when you violated the 50-day moving average here, that was it. We sold, so that was it. Now you're below the 200-day moving average. And one thing that bothers me here, and also with respect to the market, and we actually wrote an article on Market Watch about this, and that is the last time the market had a very serious sell-off in late 2008. This is 2008 here. And gold broke down in early August, broke down through the 200-day moving average. It ended up correcting about 30-something%. You're only down about 15% off of your peak right now on gold. So you're still pretty close to the highs. But last time, okay, I want you to just kind of burn this into your eyeballs or your head here. Here's gold breaking the 200-day moving average in early August of 2008, all right? And here's the market. Here's early August of 2008. Do I have this right? Yeah. And 1 month later, kaboom, there we go. We start to break down. So what I'm wondering is gold to me is telling you, is there QE out there? Does this QE have any traction? I think really the market today, if it continues to sell off, we'll see what happens in the close. I think the last couple hours should be very interesting. But I think that gold is telling you that this $489.2 trillion that the European Central Bank is going to have available for 523 banks, a total of 1.0965 billion per bank. The market really doesn't think too much of it, and I think that's really the message here. So that's what we're going to hang our hat on for now. I'm shorting this market. It may not work, but I think that's my best probability. And if my theory on gold is right, you still got another month to get set up for a breakdown in the market coming probably in January. That's my take. Maybe it happens sooner. So one thing I do want to point out here, just because I'm seeing this, I do want to point out something I will look at intraday on the 5-minute. A lot of times you get a low here. Let's just make this bigger. Yeah, is that big enough for everybody? Can all see that? I'm going to make it really big. There we go. So here's why don't we do it this way? Move that over there. Okay, here, as you're coming down all day, you hit this low here, and you bounce off, then you come in. I always watch for a low, a decent bounce, and then a retest. And if the retest comes on lower volume, usually it means you're going to rally a little bit more. So then intraday, I can anticipate that that's going to happen. I can either attune my psychology to accepting that that's going to happen, and then I'm going to sit through it, okay? Or that I may cover my position if I'm heavy on this retest if it's showing light volume and it doesn't carry through. And I did that with Amazon. I may, come back into it here because what you're seeing now is, notice now, if this is a low and now you're coming on a retest, you're actually seeing volume on the 5-minute pickup. Boom, 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 3 bars there. Boom, boom, boom. So now this thing is telling you that it's not very happy right now and it's probably going to move lower. I think Amazon ultimately goes a lot lower. from here. You know, whether you get these jerky rallies to the upside, that's another story. But for now, I'm short this thing, and I'm using the 190 level here as my trailing stop. So, anyways, that's all we got. Huge deflation is the message of gold. Whatever, it's telling me that there isn't enough juice in the market to keep things floating, and that includes gold, and there's enough money printing going on. So, anyways, somebody says absolutely fascinating today, and somebody else says this is our best presentation ever. That's good because, you know, I didn't get much sleep last night. I don't know if I got some sort of stomach flu or I ate something bad, but last night was a little bit too much time spent playing King Faisal on the throne, but I'm okay now, thanks to spearmint tea. In any case, and I'm a little bit tired from not getting a lot of sleep last night, but maybe that's the trick. We should get less sleep, Dr. K, before we do these presentations, and therefore they'll be more profound because we'll be in an alpha wave state. Is that correct?
Exactly. That's right.
All right, everybody. Thanks for listening. We'll be back at you the next time. We think there's an important day. Today is kind of an important day in the market to us, at least this week, and we're trying to time our webinars with those types of days. So be on the lookout for emails in the morning if we decide we're going to schedule a webinar, because we may just do it, you know, in the middle of the day, kind of impromptu, like we did today, like we did the week before, last week, and the week before that. Okay? Thanks for listening, everybody. We'll catch you next time, and good luck. Take care.
Take care, everybody.